All right, what's up, Tycoon? Super excited for today's video. We are going to be taking a look at Snow, okay? Ticker symbol SNOW. This is Snowflake Inc. And this one, was a very big, play in 2021 and, during the whole COVID, pandemic rally, right? When there was a lot of stocks just going ballistic. Snow was definitely one of these stocks. All right. It has fallen very, very hard, but today we're going to look at it. All right. And I'm going to give you guys some option plays to consider. Okay. I'm not giving out financial advice, but I'm just trying to expose you guys to some technical analysis and also, expose you guys to some other plays where the risk to reward ratio is a lot better if you're looking to day trade or swing trade per se than just outright holding shares. Okay. So we'll go ahead and take a look into those. So make sure you stay tuned to the end of the video. And I also do viewer requests every single week. So, if you have any stocks or tickers you want me to analyze and give you up some technical analysis for, let me know in the comments down below. So first things first, if you guys watch a lot of my videos, I chart up gaps a lot. Okay, that's what this blue box here is. And if you notice, there's a gap from where this candlestick was and this candlestick was. There's a whole gap on the chart. I like to fill those gaps in and be aware of them because historically they fill 90 to 95% of the time. It is a matter of when. Okay. It's not so much a matter of if it's going to fill, it's a matter of when. So you have to position yourself accordingly. Okay. You can try to anticipate a gap filling quickly or soon, right? Or you can look and position yourself. All right, well, hey, maybe this gap will take a year to fill. Maybe this gap will take 2, 3 years to fill. You can never predict the market, but what you can do is you can position yourself and have some good risk management involved. Okay, so that's the first thing we're going to look at is this nice juicy gap from 250 to about 234. All right. So if you're bullish on this and you think that that gap is going to fill, all right, we're going to take a look at an options play that you can play. And it is known as a vertical debit spread. Okay. Now I do have a debit spread tutorial in the top right hand corner of this video for Robinhood. If you need some help on, how to do a debit spread on Robinhood, but for this video, you guys can just watch this one and it will, I'll be giving you basically kind of a tutorial on it. So we just looked and we saw that I showed you guys we have the nice gap up to 250 from 234 to 250. All right. And Snow has been on a very bullish run. All right. If we look here, it just rallied recently about 40% at its highs. And today, even at the highs, it's 42% up from its lows, from its all-time lows. All right. So we're going to look at the play real quick because, Snow does have a lot of bullish momentum currently. And we'll get into the TA a little bit more in just a second. But if you go to May 20th, all right, and you select the 250 and you hit vertical, all right, it's going to pull up the 250, 255 vertical debit spread. And this means you're going to purchase the 250 strike and sell the 255 strike. All right. The 250 is more expensive and the 255 is cheaper. And so this is going to cost you money. So it's going to be a debit spread. All right. Versus a credit spread where you would receive income. So the bid ask is about 125 to 160. It is kind of wide. So you do have to keep in mind that when, playing debit spreads, sometimes to get a fill, you may have to come up a little bit more to 145 or to 160 if you're super desperate and just really want to get in the play and have tons of confidence. But we'll go ahead and look at it. I always like to try to get a fill at the bottom. And, one of these plays would cost $125 plus commissions, so about $126.30. If you're doing this on Robinhood, there's no commissions. So it'd just be, cost of this is $125 and your max profit is going to be $375. So, that's 300% play right there. All right. Which is very nice. That's what we like to look for with vertical debit spreads in the Options Trading Tycoons Discord. All right. The link to join that Discord is going to be in the description below. If you use code Zachly, you'll get a discount on your membership. But essentially, we like to look for debit spreads that at least have about a 220 to 250% max profit potential, because it's very easy to get 50% or even 100% on your play, when the max profit is 250%, 300% or more, right? What you can do is you don't always have to go for the max profit, right? Because we're not looking to hold this through expiration date and hold it until it expires. We're looking to trade this and gain a little bit more value than just owning shares, right? If you put in $200 or let's just say $220 into snow right now, and then it went up to 250, you'd only get a $30 reward, right? But with this, you can purchase this for less than the cost of one share, and your max profit is going to be 300%. So with that ratio, it's a really good, it's a 1-to-3 ratio, right? So even if this play fails, right, if you if you're finding plays like this, you only need to hit one of them to get back even, okay, basically essentially to break even. So you can lose two of these plays, right? And if you hit one and get your 300%, then you basically, that's what you want to look for, okay? Especially when you're trading options, you want to look for something that at least has a 1-to-3 or 1-to-4 ratio, where you can turn $100 into $300, turn $1,000 into $3,000, 10,000 into $30,000, right? That's a really good ratio that you want to look for. And of course, still use stop losses and things like that. So with that being said, we'll go ahead and look into some stop losses and where I would have them at. So right now we're looking at what's known as a bull flag on the chart. Okay, I have it charted up for you guys, and we'll zoom in just a little bit more here for you guys so it's a little bit clearer. All right, but essentially what we have is the yellow line is going to be our base support for the bull flag. All right, so here's our bull flag. We ran up here and now we're trading a little bit sideways. All right, we're consolidating. We're in the consolidation phase of the bull flag. And as long as we stay above 205, the bull flag is still going to be active. We're just facing consolidation. Now above 224.73, that is our breakout level. Okay, so once we start trading and closing above, right, as you can see, we've been able to get above the breakout level, but we haven't been able to stay above the breakout level. Okay, yesterday we closed above it, but today we opened up and we're falling back down below it. So that's really the next level that we're going to want to claim as a support level instead of a resistance. And once we flip the 224.73 level from resistance to support, then we can head up to our bullish price target of 244.11. Now if we get up to here to 244.11, there is a a little bit of a strong chance that we go ahead and just keep that momentum running and go up and fill the gap up to 250, right? But and nothing's ever guaranteed. So I would like to play that the 244 right there. That's my actual TA analysis. And then we do have the gap up. Now if we fill that gap up to 250 and pull back and find support at 244, our next bullish price target is going to be 263.50. All right, that's the next bullish price target. So what I mean by these bullish price targets, right, in the way that I have this charted up and the way to trade this, okay, is if you're not in the play currently, what you can do is you can look to add a position and start a position, okay, not go 100% into it, but maybe start a position below your breakout level, okay, and your stop loss would be below the 205.35, because if we start opening and closing and trading below here, then this bull flag is going to be invalid. But if we come down and we find support around or above this 205, then we're still in our ranging consolidation phase, and we can go ahead and look to make it past the breakout level. And once we hit the bullish price target, that is an area where there's most likely going to be resistance, okay, and you would want to take profit. All right, you can always enter back into a position. If we hit this level and pull back and come down a little bit, you can always re-enter, but now you have all of your cash free, right? Or what you can do is if you have 10 contracts or 100 contracts, you can sell half of them, you can sell 50 of them. It really takes a lot of the anxiety and stress off when you sell, when you lock in profits. Okay, so that's what the bullish price targets are for. It's to let me know and let you know, essentially, okay, now it's time to take some profit here. I can look to get back in the play, and based on how confident I am in the play, I don't have to sell all of my position because I still think that there's room to run, right? But even if you sell 80% or 90% of your position and you just have a small position size left and you see it run up to 263, that's going to feel really, really good. And you're not going to get that sense of FOMO where, oh man, I sold everything at here at 244. Oh, I'm so stupid. I should have held at 263. And then you go buy back in at 263. And what do you know? We end up falling back down because it hit that bullish price target and faces some resistance, right? So, one other thing that we'll go into is the Bollinger Bands. That's what I have here on the chart. That is going to be these white lines right here. Okay, these three white lines. This is where the stock typically is going to trade in these levels. All right. And they are most of the times going to be a good resistance or support level for you to look at and count on, right? So if you notice here, we came down, we started to trade outside of the Bollinger Bands a little bit, and the way they work is kind of like a rubber band. They're going to snap and snap the stock price back into it. Okay, so we come out of the white lines, we come out of the Bollinger Bands, and boom, it snaps back into it. We come back down, we find some support right along the bottom Bollinger Band, and then that's when we started our rally, and we hit resistance here at the middle Bollinger Band. All right, so we hit resistance 2 days in a row. And then on the third day of hitting that middle Bollinger Band as resistance, we started to trade above it. We hit our breakout level. And now we are using that middle Bollinger Band as support. Okay. So those are going to be the key support levels that we're going to want to maintain and keep an eye on. Okay. Is our middle Bollinger Band and the 205.35. If we can continue to hold this middle Bollinger Band as support, then we have a high chance, high probability of going towards the top Bollinger Band, which if you notice is just above our bullish price target of 263.50. All right. So that's basically it. That's my breakdown of snow real quick, what we're looking at, the plays that we're looking at getting into. I have suggested these plays in the Options Trading Tycoons Discord. That's really where you're going to gain access to all of my TA early and suggestion plays and call outs early, as well as the other admins. All right. There is 3 other admin traders, all professional stock traders who, have been doing this for years in the market and proven successful. All right. So link to join, description below, use code Zachly for a discount.